Hi guys, how are you? So, come to this week Wyckoff analysis and starting with Ripple as usual. And before I get into this week's details, basically it broke out from the flag pattern we talked about last week, and then now it's getting some downward pressure. Before I get deeper, let's talk about the disclaimer. This is for education and research purpose only. Always consult your local licensed financial professional for investment advice. So let's begin. So in the beginning, I already mentioned, we talked about this flag pattern, the purple lines. So it broke out right on the day we talked about it last week, and then after a little bit of adjustment or like consolidation, it broke out further, and now after hitting around, well, first it hit around 340, that's this level, and then right now, actually including yesterday, it's staying below 3.30 cents. So these are given the tick of the prices isn't at like 10 cents level. Usually these are psychological marks that people would set their buy or sell orders. So that's why whenever it hits these or around these marks, it came down. Obviously some people would front run or push their target orders according to the price movements, but usually that's a very significant psychological factor. So what would happen then after all these movements? So if I draw two lines around the top of these, let's start from this, and then the base of the candles. So it's like there's a very steep upward flag, and then right now it's trying to stay within the flag. You see the two parallel yellow lines, right? So if I extend this, it looks less steep, so it's easier. So it's like a channel here, and again, an upward flag is like a bearish sign. So, well, these are the terminologies or textbook way to say it, but you know, it's people moving the prices, so it's known that these flags are going to be broken through either up or down. So here, if it stay successfully within this, above this yellow support line, it may continue to bounce between here. If not, then we have to look at the weekly chart and what the Wyckoff method says. So last week we were still saying, or I was still saying, this is probably a second test, and it tested for 2 weeks. It stopped last week somewhere around 260, almost at the same level where the buying climax closes the candle, the weekly candle. So now that we have this new weekly candle drawn with only a day, roughly 26 hours left, this, we don't call it second test anymore. Well, we can call it second test, but it's a different second test. It's an upthrust that's higher than the buying climax. So the significance, obviously all these are testing of demand in the market. So if we look at the volume bar, it's way shorter than what we had when we had the preliminary supply and the buying climax period. You see this entire month from mid-November to early December, the volume was way higher. So this may imply there's only very limited supply this round, and there are quite a number of people fighting for it. That's why we have this longer green candle compared to what we have here. And you see this bar over here, right? And also during this candle in early December, you see this long wick up here. So this long volume bar actually also indicates there may be some larger players, or at least quite a number of people offloading their stocks in hand. So when we get to this stage of upthrust, be very careful that it can come down pretty quickly. The reason I say this is when we compare to the last time we have this distribution cycle, that's way longer. Like in March, April actually, we had the buying climax in 2021, and then we had the upthrust just 3 weeks after that buying climax, 2-3 weeks, it doesn't matter. This time we have longer time frame, but the key is, what I was trying to say is, we did not see a second test similarly to this time. It went from buying climax all straight to upthrust after the automatic reaction. So same thing, buying climax, automatic reaction, upthrust. If it really happens the same as last distribution cycle, then the fall will be immediate. It doesn't say it has to happen exactly the same this time, but at least it's a possibility. Obviously, if there's sufficient demand, given the regulatory and political environment has changed, it looks way more positive than a few years back now. It can stay up here a little longer maybe. It can happen this way as well. So it doesn't necessarily mean it will happen exactly the same as last time. So at this point though, it will be riskier, obviously. So make sure if you're chasing the run, set your stop loss more frequently. That's the approach I would take if I were to chase this surge. So that's for Ripple, and then